Hey guys, welcome to the Investor's Guide of Memphis Real Estate. I'm your host, Dean Harrison. As always, I'm with Douglas Skipworth. How are you, buddy?
Hey man, doing great.
We're bringing you this podcast to give you the boots on the ground knowledge to be a successful real estate investor here in Memphis, Tennessee. Please like and subscribe to the Investor's Guide of Memphis Real Estate on our YouTube channel, Spotify, Apple Podcasts, Facebook, wherever you want to listen to the show. Show sponsors are listed on the screen below. We would not be able to do this show without them. We've got Triumph Construction, River City Title, Cortland Financial, CrestCore Property Management, and Will Griffin with Griffin, Clift, Everton, and Mashmeyer. I help buyers and sellers every day here in Memphis. Dean at CrestCore.com. If you're a buyer, I'll send you that buyer link and we'll start sourcing deals for you that you're looking for. And if you're looking to sell anything here in Memphis, if you're listening and you've got an investment deal to sell, Dean at CrestCore.com. Okay, let's jump right into this today because I have a sneaky feeling that this is going to touch some people and their interest. Every listener probably.
Yeah.
Today's topic in today's podcast is about low entry investing in Memphis. A low dollar amount entry investing in Memphis. Memphis is one of these places where you can get in low.
Yeah. Oh, yeah. I mean, I think that's one of the attractions.
It is it's one of the things that I typically talk about when somebody calls me and says, "Hey, why Memphis over X, Y, Z? Why Memphis?" And one of the first things I go to is it's low entry. Yeah. And we're going to discuss some lower entry here to stay away from. But the area that I'm going to tell you to come in at is low entry, right?
Oh, absolutely.
In relative terms to the country. So, I mean, it's low entry. So the first thing I think about, when we talk about this is how low should we go? A lot of my first initial questions are, how low do you buy rentals, and meaning rental amount, rental tenant base? Where do you go? What's the lowest amount? Me, I'm a little different. I'm local. I can handle things a little bit different here. But I still tell you, I tend to follow the exact rule of thumb that I give my investors.
Oh, good.
2018, 19, 20, I think that number was 8 and 850.
Yeah, I was going to say pushing 900.
I would tell you to be real cautious on anything at 800, 850, maybe even 900. Then I was like, you don't need to go below that at all.
At all.
Right? I was like, that's kind of the threshold. You come to me at 700 rental, it better be a pretty good deal in a good area in the but even then.
Yeah, 2-1 maybe or something.
2-1, that's right. All right, so now, staying away from those low end things, like where do you enter in? Like where is that? I would not go below now. I'm just telling people $1,000 rental.
Right.
That's what I'm telling them.
Yeah.
Now, if you come to me with a deal and we have something that goes out that rents for $850 and $900, are you going to go along with it? My answer is yes, if it checks all the boxes, right? But as a target, as a goal, I believe you should stay at $1,000 a month and up.
Yeah. No, I think you're right. I mean, I think kind of going back to the beginning of this is a cheaper entry point for most of the nation. We had some investors in here yesterday from California. They couldn't believe what the prices were compared to their home in California, Southern Cal.
Yeah.
The houses that they're looking at investing here are $1 million houses in their part of the country. So for them, it's a lower entry to the rental market. Then when you get here, I think what you're saying is there's some lower than low. And that you want to avoid. Leave them for what I've always said it's leave them for the local experts.
100%.
Leave them for the local experts.
I've got some guys that'll get a hold of a property that's $50,000 and they'll put it on a spreadsheet and it needs $15,000 in work or whatever. And they're like, oh man, this will rent for $700 and $650 and whatever. And it's like, if you put all that on a spreadsheet at that low of a price, it's going to look fantastic. It's going to look like something you can't pass on.
Fool's gold.
Fool's gold. I wrote it in my notes.
I was like, you couldn't. I thought about this as just checking your notes. You couldn't give me a $50,000 house for free. And
say that again.
You couldn't give me I was kind of like, there's caveat. You couldn't give me a $50,000 house for free that I could not sell within 10 years. So if you said you have to own this house for 10 years. It's yours for free, and it's a $50,000 house here,
pass.
$700 rental, whatever.
Yeah.
I would say pass because the cash flow would not cover that years, and then the appreciation after that 10 years wouldn't be worth what you'd invested. $150,000 house, I'd do that deal all day long. If you gave me a $150,000 house and said I couldn't sell it for 10 years and it was free and clear, and you just had to use the cash flow to pay for whatever repairs are needed,
Where do I sign?
Where do I sign?
The spreadsheet looks super great, right? Super sexy, man.
Spreadsheet that
On a $50,000 house, of course it does, because I mean it's just simple math. But it is not reality. That's not reality. That's not actual investing. That's an exercise that you're performing calisthenics.
Here's geeking out. That is geeking out. I'm going way back to Econ 101 college. That's called ceteris paribus.
Well, don't ask me, Douglas.
All things being equal. That's what that's the world economists live in. All things being equal.
That's right.
Ceteris paribus. I remember it now. And it's like that's not reality. Like all things aren't equal when you put that 50 grand into the real world. On the spreadsheet, everything stays the same, and you can manipulate it. In the real world, you get manipulated.
So you can't rely on your spreadsheet in those circumstances. A lot of people do, and man, it goes bad. The unsuspecting investor that's listening that starts to do a mild amount of research on Memphis, you see that even 65, 70 grand. I'm just telling you, anything in that area is going to cause you some stress and struggles along the way.
Like what kind of stresses and struggles?
Well, the tenant's going to move in. They're going to pay $700 a month, and they're going to there's going to be one income in the household typically.
Yeah.
And they're going to be in there. They're going to be trucking right along, and either mom or dad's going to lose their job. That because of that turnover in that $12 to $15 an hour range is high, right?
Yep.
So they're going to turn over. They're not going to take as good of care of the home just because that's just the nature of the beast. So you're going to have some wear and tear on the property. You're probably going to have a move every year. You're going to have annual turnover. So unless they're really delicate with the home, you're going to have $5,000 worth of rehab to paint it and floor it and do whatever. And you're laughing because $5,000 is probably not nearly enough on an annual basis on a home like this. Because so let's settle down then. What you're going to do with this $50,000 house is you're going to put about 15 grand in it, and you're going to walk in it, and the walls are going to be clean, and the floors are going to look great, and everything's going to be operable, and it's going to be great.
It's going to look good.
It's going to look good. And then they're going to move in, and they'll move in with 3 or 4 people in the home, 3-4 bedroom home, 3-bedroom home. There might be 1 bathroom in it, right?
Yep.
So you're going to have 3 people actively using 1 bathroom. There's 3 times the wear and tear on that. You're going to remodel that at least every 2 years. Yep. Your kitchen's going to be small, so there's going to be a lot of people and a lot of activity into that kitchen. The floor is probably going to get warped somehow from the water because they don't care. It's not going to typically have a dishwasher in that low rental amount, so they're going to be hand washing. So you're going to have water and things and everything. You're probably going to have countertops about every 3 years. So cabinets about every 5. So you can't tell me. And by the way, I know this.
Yeah, you're speaking
from
the truth.
Personal experience. That's the reason why this. I'm getting a little animated with it because I got a few of these right now that I could throw in the river. So the Mississippi one. The big one.
Yeah, the big one. Yeah.
So that's how it actually happens. And then all of a sudden you've got a house that you've turned over and you look at it at a 3-year scope and you've lost X amount of dollars on it and you're wondering what in the world's going on.
And that 15 grand rehab you did is now a $25,000 rehab.
Because everything's gotten more expensive.
And you're like, what? Everything's gotten more expensive.
Now the rent
it all again.
Now the rent is set from $7 and it's now a big whopping $850. So I am guilty. I want to put a caveat on this. I am guilty of buying these houses, this product. I still have some. I've said this in the last few podcasts.
Yes.
We're beginning to move some of those away from ownership. So I'm here to tell you that there is a threshold that you need to buy rentals at in Memphis. And if I'm giving you that advice from me to you, it's $1,000 and up. Okay.
And that's what you're here to do.
Yep, that's right. The houses that are in the $100,000 to $150,000 range are typically our C- to B- properties, depending on the location. Very rarely would I call a 150 grand home that's in good shape a C or C-. That to me in our market would be a B property.
Solid B.
Probably rent for $1,350 and up. Is a $150,000 house. So that to me would be the target range that I feel like is safer for the money, that the cost to get in, the area that property is going to be in, the tenant base that's going to live in there, and the longevity of it. If you take real good care of that, I believe that tenant stays probably 3 times as long as the $700 tenant or $800 tenant. You agree with that?
Yeah.
I mean, as long as you take care of it,
right.
It's good home. So that tenant base is there. Higher risk of issues, that come with those lower. We've touched on some of this. Some of the lower pays. or the late pay, higher maintenance requests in some cases, maybe a higher turnover. We talked about some of that, but separating on the flip side of that, you get into the $1,300, $1,500, $1,600 rental range. I think you have the opposite of that. I think you have less maintenance calls. I think you have less turnover, and I think your class of tenant is just a little bit higher.
One thing you didn't touch on sometimes, theft or vandalism, more theft at the turnover.
Yeah.
That can happen in some parts, some more challenging areas that don't happen in other areas. So you got to cage your condenser. You got to worry about your water heater. You got to worry about your furnace. You got to worry.
That's one of my things. Let's talk about these differences. Like I made the note, make the house a tank, and that's truthfully it. It's like if you do have these, and that's what I've done.
Yeah,
if you do have some that are lower end, there are ways that you can try to help prevent some of this as you go. Cage the HVAC condenser, hardwood flooring.
Tile.
Yeah, not hardwood like wood,
like
but
a hard surface
flooring.
Yes.
A lot of times in your kitchens, if the more durable those faucets and the more durable the stuff that you buy, the nicer stuff that you're going to buy in some cases is going to help. So there are ways that you can, somebody told me the other day they started using satin paint so they could spray it and wash it.
Yeah. You've heard all kinds
I've heard all kinds of different things. So, there's a bunch of different stuff that you can use, that you can do. So today's topic was mainly just talking about the threshold of rent and the low entry point of where you should be. I get concerned with telling people to come in below that $1,000.
Yeah, maybe we're harping on this, but we're trying to keep you informed.
Sure.
That's what we're doing. So much a part of investing is appreciation. People talk about, we got to cash flow, got to make this, got to do that. But I'm here to tell you, in my experience, that appreciation has been really good, and it's lumpy. It's not steady every year, but if you look up over a long-term hold, you've made a lot in appreciation.
Yeah.
And so in some of those areas, the appreciation isn't as great because it's only investor. There's not a lot of owner-occupant in the neighborhood. It's only investors in the neighborhood. The rents aren't increasing as much. So again, having that owner-occupant or investor exit strategy on a sale keeps appreciation going. So those are some neighborhoods that we kind of like to look at. If it's only investors, that limits your exit strategy. So
I don't think people value what you just said enough. Because a lot of people will say this is a hot investment area because it's a rental area, and that might be sound appealing. That's another fool's gold statement to me. You get into an area where there's a ton of investment properties and nothing but tenants living in there. Can you imagine how that's going to go when you try to sell it? It's going to only go to an investor. They're only going to want a deal.
Only want a deal.
It's not. I don't encourage anyone to get in just all areas where it's just a heavy dominant area. And it's easy for investors to get in there because there's available properties.
Yes.
So they feel like, hey, I can go jump on this. It's a good deal. Well, it's a good deal for a reason. So that's a great point. Paying for what you get in this is so.
You get relevant. What you pay for. That's one of the things I wrote. It's like it goes back to the old. Realtor, man, I am the Latin scholar today. Caveat emptor, or whatever they used to, whatever you did in those real estate classes. It's like buyer beware. That was the old day, and it's a little bit more of that one now that they're separating all this NAR stuff.
Yeah.
But anyway,
everyone beware.
Everyone beware. But it was buyer beware, and that's what we're saying here. Just buyer beware. Use. Did you even get there? I think that's use knowledgeable experts like me to guide you through this process.
I don't necessarily try to put us over every time.
Look at the zip code. Yeah. Look at the zip code podcast. Call Dean. Call the team.
One of the things we don't do is send out houses in areas where I wouldn't buy and where we don't suggest to buy in. Yeah. I just don't have them. They're there. We've talked about the areas in the zip codes, but I don't send them out.
Yeah.
I just don't. So that's one of the reasons and one of the things where I keep moving my standards up as well.
And you said it about kind of where you are, and I've been encouraging you for years to kind of cull the portfolio, make some adjustments, and because that's the same thing I did. I was the spreadsheet jockey.
Yeah.
I rode that spreadsheet and got every deal I could.
Yeah.
And then I looked up and I was like, what the heck just happened? And had to come to you and say, hey, Dean.
Let's move some of these.
Let's move a lot. We had gotten way overextended in areas that we didn't need to be in.
Without the number, what percentage of your portfolio was it? 20.
I was going to say it wasn't a third. It was plus 10, less than a quarter, but it was a good percentage.
Yeah.
That we just shooting from the hip, and we haven't done this, and it looks good on paper, and we're already buying, and that just already related to that area. So, hey, we're close. Why not go to a few streets over or a few blocks down? And
doesn't work.
It does not work. And so it does not work. So that's why you helped us,
move some of those out,
some of those properties, and a lot of your skill, but a lot of your listings come from helping people get out of bad situations.
We can move. The one thing I love, we've got 46 closings for May.
Congratulations.
So
dude.
we'll
That's
cancel
awesome.
some of those. But the one thing that we can do here with our team is move investment property.
And I bet as much as anybody, I would put myself in the houses I've sold through you from bad situations up against anybody you've helped, number-wise.
Man, I appreciate you.
Yeah.
It's great. Great topic today. Low entry here in Memphis. Low entry, investment point here. If you have any questions, Dean at CrestCore.com. We'll see you soon.